Okay, let's unpack this. Imagine a company not just hitting its targets, but, well, absolutely sailing past them, years ahead of schedule. That's exactly the fascinating story we're diving into today. The latest from Carnival Corporation and Plague Flips, hot off their Q2 2025 earnings release and the industry analysis that followed.
Yeah, and what's really compelling here is how these remarkable results, they don't just reflect strong financials, they also offer a unique lens into, broader trends in consumer behavior and the sheer resilience of the global travel industry, especially how a major player like Carnival is strategically navigating what's, let's face it, a pretty complex world.
Absolutely. And when we say sailing past, we really mean it. Carnival's second quarter of 2025 was, well, nothing short of a landmark. Their adjusted EPS hit $1.35. That significantly beat the forecasts of $0.24. I mean, that's a 45.83% positive surprise.
Wow, yeah, 45%.
And the revenue, a staggering $6.33 billion, comfortably surpassing expectations by nearly 2%. What's more, their net income saw an improvement of almost $475 million. And their adjusted net income, get this, more than tripled compared to 2024. That outperformed their own March guidance by an impressive $185 million.
These aren't just, positive numbers. They actually represent Carnival's highest ever second quarter operating results. That's huge. We're talking record-breaking across multiple critical metrics. Record Q2 revenues, net yields, operating income, and adjusted EBITDA.
Okay, so adjusted EBITDA, remind us quickly what that signifies.
Right, so adjusted EBITDA, that's basically their core operational profitability before you factor in financing costs, taxes, depreciation. It's a key health indicator. And seeing that up a solid 26% year over year to $1.5 billion, that signals a really powerful return to efficiency.
Yeah.
And those record net yields you mentioned, that's the revenue they generate per available passenger birthday, they indicate really strong pricing power and demand, even after adjusting for currency ups and downs. These figures, they really speak to a profound turnaround and some significant operational tightening.
And here's where the narrative really takes an exciting turn, I think.
Yeah.
Carnival didn't just meet their 2026 SCA change financial targets. They actually blew past them a full 18 months early.
18 months, that's really something.
Right. So to put that in perspective, their adjusted return on invested capital, or ROIC, that's a key measure of how efficiently they're using capital to generate profits. It more than doubled in less than 2 years. It exceeded 12.5%, which is a level they haven't seen in nearly 2 decades.
Doubled in less than 2 years.
And their adjusted EBITDA per available lower birthday ALBD that increased 52% from its 2023 baseline, also the highest in nearly 2 decades. Plus, on top of all that, they met their sustainability target of cutting carbon intensity by 20% from 2019 levels.
This really compels us to ask, what does it genuinely signify for a company to not merely achieve, but dramatically surpass its ambitious long-term goals, so far ahead of schedule?
Yeah. What does it mean?
Well, for Carnival, it's not just a confidence boost for investors, though it's certainly that. It fundamentally shifts how the market perceives their underlying business model and, importantly, their future growth trajectory. It suggests that their strategic initiatives, from cost management to demand generation, aren't just giving incremental improvements. It feels like they've created a kind of compounding effect, really accelerating performance. And this kind of early success, it often frees up capital, right, for more aggressive expansion, maybe further innovation, or even greater shareholder returns down the line. It fundamentally distinguishes them from peers who might still be in recovery mode.
So how exactly did they manage this incredible turnaround? How did they ride such a powerful wave of success?
It really looks like it boils down to a relentless focus on two critical areas:
Yeah.
incredibly robust demand and disciplined strategic cost management.
That sounds right. CEO Josh Weinstein put it well, didn't he? He said their amazing team delivered yet another phenomenal quarter, more than tripling adjusted net income driven by record net yields and strong close-in demand. He also highlighted that cruises offer tremendous value compared to land-based alternatives, which seems to have been a huge factor in their resilience and ability to capture market share.
Yeah, and that tremendous value proposition, it isn't just marketing speak. We see it tangibly reflected in their booking data. Customer deposits, which are a great leading indicator of future demand, they soared to an all-time high of $8.5 billion.
$8.5 billion.
Billion, yeah. Think about that. People are putting down significant money for future cruises. That signals real confidence from the consumer. And even more impressively, 93% of their 2025 capacity is already booked, and booked at historically high prices.
93% for next year already.
already. And looking even further out, their 2026 bookings are right in line with these record 2025 levels, also commanding strong prices. This elongated advanced booking window, as they call it, it's a game changer. It gives Carnival significant stability, reduces the need for heavy promotions later, and gives them immense flexibility to strategically manage pricing and operations for years to come. It's really a stark contrast to the short-term booking cycles some other travel segments are still dealing with.
And it's not just about filling the ships, right? It's intrinsically linked to profitability. Carnival achieved their highest second quarter margins in nearly 2 decades, comfortably surpassing even 2019 levels. Josh Weinstein even famously remarked, "I never thought of 2019 as a ceiling," and we've now proven that out.
Yeah, that quote stood out.
On the cost side, this is impressive too. Their cruise costs per available lower berth day actually decreased by 0.3% compared to 2024. And fuel consumption per ALBD dropped by a notable 6.3%. Getting higher revenues and lower costs simultaneously, that's often a really tough balancing act for any large corporation.
Absolutely. And if we connect this to the bigger picture, it really underscores that Carnival isn't just passively benefiting from, market tailwinds. They've been actively, meticulously optimizing their operations. The decrease in cruise costs per ALBD, that significant reduction in fuel consumption, these aren't random things happening.
Right.
They reflect strategic investments in energy efficiency across the fleet, optimized routing, rigorous supply chain management. It's a whole package. This multi-pronged approach, leveraging strong demand for premium pricing while simultaneously tightening operational spending, that's textbook execution, for driving superior profitability and expanding margins way beyond pre-pandemic benchmarks. It's really a testament to effective execution at every level.
Okay, so looking ahead now, it's clear Carnival isn't just, sitting back and counting the money. They're making significant strategic investments to further solidify their future.
Yeah.
Let's start with the Paradise Collection, their initiative to enhance and expand private destinations.
Yes, the destinations. Very important.
One of the crown jewels here seems to be Celebration Key on Grand Bahama Island. It's set to open in July 2025. And this isn't just another beach stop, is it? They're boasting the largest lagoons in the Caribbean, over 275,000 square feet. That's multiple times larger than any other private cruise destination out there.
Huge lagoons, yeah.
Plus over 1.5 miles of white sand beach, and apparently the world's largest swim-up bar and sandcastle.
Sure.
It's already consistently ranked among the most searched cruise destinations on Google, which tells you something about the public interest.
Definitely generates buzz.
They're also enhancing Relaxaway, Half Moon Cay, with a new pier by summer 2026, which could potentially double visitor numbers. And Mahogany Bay in Roatan, Honduras is getting a rebrand, becoming Isla Tropical in 2026, with planned expansions like a new pool, swim-up bar, cabanas, and double the beach line.
The strategic importance of these destination investments is really profound when you consider that beaches are consistently the #1 destination for vacationing Americans. Well, having exclusive, meticulously designed private destinations like these becomes a massive competitive advantage.
It sets them apart.
Absolutely.
Yeah.
They don't just enhance the guest experience, they serve as powerful booking incentives. They directly drive consumer consideration and actively take market share from traditional land-based vacation alternatives. It's really about creating a holistic, curated experience that starts from the moment you book and extends through every part of your trip. And that lets them capture a larger share of the guest's overall vacation spend. It shows they really understand the core desires of their market.
And beyond destinations, Carnival is also relentlessly modernizing its fleet and adding new builds. The Ada Evolution Upgrade program is a fantastic example. Ada Diva, the first of 7 ships, is done, and apparently it's already showing huge take-up for its many added bar and specialty dining venues and rave reviews, which tells you a lot about what today's cruise guests are looking for, right?
Yeah, the onboard experience is key.
They've even placed orders for 2 new builds for Ada Cruises for delivery way out in 2030 and 2032, signaling real long-term confidence. And for Carnival Cruise Line's new XL-class ships, Carnival Festival and Carnival Tropical, arriving in 2027 and 2028, they're introducing something called Sensation Point.
Sensation Point. Okay, what's that?
It's being touted as the most family-friendly water park at sea. And get this, featuring extended evening hours with vibrantly illuminated waterworks and even a DJ, turning a daytime thing into a nighttime experience.
Interesting. Expanding the usage time.
Exactly. Plus, let's not forget the Star Princess, sister ship to the award-winning Sun Princess, that's set to arrive in the 4th quarter of 2025. So lots happening with the ships.
These fleet investments are absolutely critical for, I'd say, 2 main reasons. First, they elevate the guest experience to new heights. Second, they directly fuel future demand. By continually upgrading existing ships and introducing innovative new ones, Carnival can not only command higher pricing, but also attract new segments of travelers, particularly families and younger demographics who might be drawn by features like that sensation point.
Makes sense.
It ensures their product stays fresh, competitive, and highly desirable in what's a very dynamic leisure market. And that directly supports their long-term revenue growth ambitions. It's a clear signal, really, of reinvesting profits back into the core product to maintain that market leadership.
And as if that weren't enough change, they're launching a fascinating new Carnival Rewards loyalty program in June 2026. This is being called an industry first. Why? Because it ties loyalty benefits and status to total spending.
Total spend, right, not just the cruise fare.
Exactly. Not just fares, but also onboard activities plus co-branded credit card purchases. This feels like a really significant shift in how loyalty is defined in the cruise world.
It absolutely does. And this new loyalty program, it raises a really intriguing question, doesn't it? How will this comprehensive approach to rewarding total spending reshape customer engagement and lifetime value in the cruise industry? Maybe drawing parallels to some highly successful models we've seen in, say, airlines.
Good comparison.
Carnival expects this program to be cash flow positive right from day one, and yield accretive, meaning it adds to their revenue per birthday after about 2 years. They're projecting an initial maybe half a point impact on yields in 2026, a bit less in 2027, probably neutral in 2028, and then distinctly positive after that. It's a really savvy strategic move designed to foster deeper brand loyalty, encourage more onboard spending, and ultimately increase customer lifetime value by recognizing and rewarding a much broader spectrum of customer engagement. It's about building a sticky customer base for the long haul.
Okay, so now, despite all this impressive growth and forward momentum, Carnival is still navigating some, well, undoubtedly rougher waters out there. CEO Josh Weinstein openly acknowledged the complex macroeconomic and geopolitical backdrop and the heightened volatility.
Yeah, you can't ignore the external environment.
They are actively monitoring geopolitical tensions, especially in the Middle East, though they expect minimal impact on itineraries right now. Only a couple of ships at the very end of this year and for the winter, a few months into 2026, are potentially affected, as they're already proactively avoiding the Red Sea region. And regarding those widespread concerns about lower-income consumer struggles in the current economy, well, Carnival explicitly stated they haven't seen any differentiation in booking patterns across income levels.
Interesting. It is interesting. And these external risks, they are indeed real and demand constant vigilance. Of course. However, Carnival seems to be aiming to mitigate them through its robust value proposition and that strategic booking flexibility we talked about. Their consistent emphasis on providing incredibly stupid value when it comes to the alternatives, as Josh Weinstein rather colorfully put it, that helps them remain an attractive option even in an uncertain economic environment. This inherent value, combined with those really strong forward bookings we discussed earlier, provides a significant buffer against sudden shifts in consumer sentiment or unexpected global events. It allows them to adapt itineraries if needed without severely impacting their financial outlook, which really demonstrates a well-diversified and resilient business model.
So to kind of cap off this incredible deep dive, Carnival has once again raised its full-year guidance for 2025. They now expect full-year adjusted net income to reach $2.69 billion. That's up from $2.49 billion previously.
Another raise, okay.
Adjusted EBITDA is expected to hit approximately $6.9 billion, which is an increase from $6.7 billion. And critically, net yields are projected to be about 5.0% higher than their already strong 2024 levels. That just reinforces that pricing power they have right now.
What's truly striking here is the disciplined dual focus. On one hand, aggressive debt reduction. On the other, continued significant investment back into the product. That demonstrates profound long-term confidence despite any short-term uncertainties.
Right. It's not just one or the other.
Exactly.
Yeah.
Their net debt to adjusted EBITDA ratio, it's improved nicely to 3.7 times, down from 4.1 times just the previous quarter. And they've strategically refinanced nearly $7 billion of debt at favorable rates. That's smart financial management. This rigorous financial discipline has even led to credit rating upgrades. They're now within one notch of achieving investment-grade ratings with both S&P and Fitch. That whole trajectory signals a very healthy balance sheet and significantly enhanced financial flexibility for whatever comes next.
So what does this all mean for you, our well-informed listener? Well, Carnival's strong Q2 2025 performance, driven by incredibly strategic execution and what looks like a very clear path forward, truly showcases their resilience and ambition in the leisure travel industry. It really proves that even a massive player can pivot, adapt, and ultimately thrive.
Yeah, and this remarkable turnaround and clear forward momentum, it kind of invites us to consider, doesn't it? What other mature industries, maybe facing similar macroeconomic and geopolitical complexities, could learn from Carnival's strategic blend of offering irresistible value, constantly innovating in their core product, and making disciplined long-term investments?
That's a truly insightful question to ponder, maybe as you plan your next adventure. Thanks everyone for joining us for this deep dive into Carnival's record-breaking quarter.